Well, Asian markets, they're trading more or less higher despite the lingering concerns of a global slowdown as well as a weak handover from Wall Street. The Nikkei was shut yesterday, it reopens today. That's opened up with some green. It's up close to around 0.5% odd. The dollar yen holding at around that 108.5 odd mark. Pull up the other couple of markets. The Kospi as well, that was trading with a bit of a positive bias the last time I checked. Let's pull that one up. In fact, it's up close to 100% as we speak. And the other couple of markets as well, the Straits and the Taiwanese index, both of them should come up for you. So it's green to kickstart trade, and that would mean that the SGX Nifty, after ending in the red yesterday, could indicate a bit of a bounce back. Maybe a 40-point bump up is what we could get. Just a kickstart trade.
Well, on the Wall Street, U.S. market ended in the negative territory as weaker than expected China trade data sparked fresh fears of a global economic slowdown. Corporate results were also in the spotlight as fourth quarter earnings season got underway. The Dow ended 86 points lower. The S&P 500 fell 0.5%, while the Nasdaq Composite dropped almost 1%. CNBC's Aditi Roy gets us a wrap of all the action on Wall Street.
U.S. stocks finishing lower, the Dow off 86, the S&P down 13, and the Nasdaq lower by 65. PG&E stock falling more than 50% after the company said it will file for bankruptcy protection. In a regulatory filing, PG&E saying if it were found liable for all costs related to the 2017 and 2018 Northern California wildfires, which includes the big Camp Fire, the liability would exceed $30 billion. That's not including punitive damages. The Camp Fire was the deadliest blaze in California history, killing at least 86 people. On Sunday, the company announced that its chief executive officer, Geisha Williams, would be stepping down. CNBC parent company NBC announcing its own streaming service today. The service is expected to launch in 2020 and will be a free ad-supported product. It will include live television, news and sports, as well as on-demand programming. In addition to NBC-produced programs, the service will also include content from the likes of Sony, Discovery, even Warner Media. And Aquaman topping $1 billion at the global box office last weekend. The film's success showing why international ticket sales are so important to Hollywood. More than 70% of Aquaman's revenue comes from countries like China, Brazil, and the UK. That's the action from the U.S. market. Back to you in Mumbai.
Well, on that note, here is some opinion on the U.S. market and earnings expectations.
Growth in 2018 was about 3%. The Federal Reserve itself believes that the most the economy can grow on a sustained basis is about 1.8%. Why? Because the population doesn't grow very fast, about 0.5% per year in terms of the labor force changes, half of the old rate, and productivity is only about 1% or so. And so the economy can only grow in the high ones. It's been growing in the high twos. So it's actually necessary to see this slow down in order to sustain it. If growth had stayed at 3% in 2019 and 2020, it's most likely the jobless rate would fall toward 3% from the current 3.8%. And the wage figures would move up in a way that makes it less profitable for businesses, and there'd be a little more inflation and higher interest rates. And so this is the type of pause that could refresh and help sustain the expansion in the longer run.
What's happening in Washington is less important than the growth backdrop and U.S.-China trade negotiations, where I think that impact on sentiment and the spillover effects to growth should talks break down and an a downside case that we do get further escalation in trade tariffs and tensions, I do think is the biggest risk to markets, because March 1st deadline, if things don't improve, we could see potential another leg down in markets, which then spill over into hit corporate sentiment and consumer sentiment that then impacts the real economy.
The president's trade war has already affected sentiment, partly investor sentiment, business sentiment. The Duke University runs a survey of CFOs, and CFOs expect a recession in 2019 in significant part due to the trade war, and I'm sure the government shutdown is now starting to conflate with that. The other thing that's going to come up pretty soon is the Treasury debt limit. We hit the debt limit March 1, and then, of course, Treasury has ways to maneuver around that for some time. But, the longer this goes on, the more things come off the rails, the harder this is going to be on sentiment and the more damage it's going to do. So, so far, no big deal. But I think the costs will mount pretty quickly as the collective psyche begins to get worn down here.